S&P is on track for its best January in more than 25 years. Futures popping higher after 25 European countries sign on to tighter fiscal discipline, and investors wait for Amazon earnings after the closing bell. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. So, Scott, we have S&P on track for the best January in 25 years here. How important is it that we end strong today?
I think we're going to end strong because you have a great month, so people are going to want to mark it up. Then I also think with the beginning of a new month, you're going to get some new monthly flows. And since we didn't have the pullback that everyone wanted, as you know, in the last few days where it was very shallow, some people are going to start to think, I better start chasing. And if you're still short or short tier 2 and we don't go down into the first few days of a new month, you could see a little bit of a squeeze as well.
I just want to point out, though, that since 1972, the S&P's returned 1.5% in December, over 1% in January, and has gone negative for February. And right now, the S&P's up over 4% for the month. So could we argue that we might actually see a slowdown after investors really bid up this month?
I don't think we're going to have the same type of month in February, but I think it could be a stock picker's month. This January set the table for what could be a really good year. I think traders are very grateful that we've had a very methodical tape. We've had sector rotation, we've had breakouts, we've had situations to ride for multi-weeks. We've also had cash flow for multi-days. So at this point, if we could just have half of what we had in January, I think traders are going to stay the course, and it could be a really good year for any type of market participant.
All right, let's go to the chart because I want to see what levels you're going to be watching, what's that trading strategy around those levels, and also we're now Golden Cross territory. We heard a lot about that yesterday.
I think a little bit too much about that, but there is some significance and some importance. So if you take a look at the chart, you'll see, remember we talked about the floor on the spiders. I'll show you the spiders again. This was that accelerated uptrend that started when this descending channel broke to the upside. It's been methodical, it's been moving, it's been going higher. And then the last 2 days were kind of interesting. We were testing that 130.60, 130.80, and yesterday the bears had their chance. We were below it. Around 10:30 they could have pushed us below, and they had no power. So we wound up closing off the lows. We closed 130, 137. We're opening right back in this channel. So at this particular point, I covered only half my shorts yesterday, and I didn't put too many longs back on, but I do think that you stay the course, and if we can get above this high here of what it was, this was like 133.40, in the next few sessions, we're going to be seeing 135, 136 at some point in the next few months.
So what's your strategy then? You have half your shorts still on. Are you going to keep them on? Are you going to cover here, and then are you adding to your long positions for momentum today?
I'm going to keep half of my hedges on. Yesterday when we went below, we were around 130.15. I covered half my dimes, meaning buying back, and I sold half my VIX because I still had some longs on. I didn't really say I'm going to start buying this dip because I wasn't sure that pull-in was enough. But coming into today, I still have about 7 to 9 positions long. So having a tier hedge is not such a bad thing, considering that every day we could open down and trade around it and add to stocks showing relative strength. I still think if you're going to have a portfolio approach moving forward, you have to have some hedges on. Just don't mute too much of your gains by being too excessive. So know that ratio. So
then what stocks are the long positions that you're dealing with?
Well, yesterday I was eyeing Apple, and Apple showed a lot of relative strength. I was in some Apple yesterday. I added to my Apple today. It's opening above this pivot. If you look here on Apple, you will see that it broke above this 2-day pivot I was talking about on my radio. Now it's going to break above earnings highs. I think it maintains this this 455 this morning. We could see 460 plus today. Yesterday, I bought some Qualcomm options. I think the report's going to be good. I like the pattern here. It's been under accumulation for a long time. I don't love taking stock into earnings, and their earnings are coming out Wednesday, so I figure with this accumulation, perhaps we get a nice pop in earnings. I know SanDisk was a similar strategy, and I lost a premium paid, but no big deal. I'm also staying with the OAHs. I'm staying with some XLF. And
then really quickly talking about earnings, we have Amazon after the closing bell. It's going to be a really rough quarter, right, because they seem to be sacrificing profits in terms of sales. So how are you trading it? What are you thinking about very quickly?
This one I'm not going to make a guess on. The premium is way too expensive. So if you're going to take options into earnings, you have to be excessively right. What I'll do is I'll wait for the report to happen and see how it acts. If you look here on Amazon, once the report is out, if they're in line or better, and it starts trading above this 195, I think that you could see 210, 220. But if they miss again, like they did around here, you have to be watching that 170 to 165 support.
All right, good stuff. We're going to have a lot more on how to trade earnings from Amazon, as well as say the U.S. Steel and Exxons of the world in the entire morning call. So stay tuned with The Street.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.